Today, Washington, D.C. files a lawsuit against Amazon. It says Amazon's treatment of sellers is anti-competitive and you are paying more and have fewer choices because of it. And could traditional exchanges like the New York Stock Exchange and NASDAQ soon be a thing of the past? We look at a new type of decentralized exchange, and it's growing fast. And truckers in California fight to continue working as independent contractors. It's after a court put their future in limbo. They say California's gig worker laws hurt drivers. That and much more coming up in NTD Business. Good evening. Great to have you with us. DC's Attorney General is filing an antitrust lawsuit against Amazon. He says it engages in anti-competitive behavior. The lawsuit says third-party sellers on Amazon are restricted from offering their products on other websites at a lower price, and that keeps retail prices artificially high across the internet. The lawsuit doesn't say Amazon violated federal antitrust law, just DC's own antitrust law. If you're one of the 37 million Americans expected to travel this Memorial Day weekend, you better put aside a few extra dollars for gas. The national average is just over $3 a gallon. That's the highest price since 2014 and $1 more expensive than the same time last year. The cyber attack on the Colonial Pipeline earlier this month is getting part of the blame. It's back in full operation, but some gas stations in the southeast aren't fully stocked yet. Others, they're blaming the price hikes on increased global demand or even the devaluing of global currencies. The price of almost all other commodities are rising too. So businesses, they have higher costs to worry about and the threat of higher taxes. But now over 25 business groups are teaming up against government tax hikes. One business leader says the pandemic has already taxed businesses enough. NTD's Phil Zhou has details on the new initiative.
28 U.S. business groups are joining forces to fight against the Biden administration's proposed tax hikes. They're forming a new alliance called America's Job Creators for a Strong Recovery. The group says raising taxes on businesses and corporations will hurt the U.S. economy.
That this industry is among the unsung heroes of 2020. You've kept America's store shelves stocked for American families.
The National Association of Wholesaler Distributors, one of the organizers leading the group, says American businesses are just starting to recover from the pandemic and that the record tax hikes that Democrats are seeking could not come at a worse time. Another member of the alliance says taxing them again while they are still struggling to recover just goes too far. The U.S. government is seeking to raise corporation taxes from 21% to 28%. The new taxes will go towards projects such as President Biden's proposed $2.3 trillion infrastructure plan. Phil Zhou, NTD News.
The alliance plans to target key states with moderate Democratic lawmakers like Arizona. It's also expecting more members to join the alliance in the coming weeks. With taxes, you can run, but you can't hide. Well, at least if Senator Elizabeth Warren has anything to do about it. She says she wants to go after wealthy tax evaders by tripling the IRS's annual budget. Usually Congress goes through a budgetary process to decide how much to allocate to the IRS each year, but Warren's proposal would give the IRS over $31 billion every year. The IRS would have to shift its audit priorities to target wealthy tax filers and corporations, and penalties would increase for any taxpayer making over $2 million a year. Warren said budget cuts have hollowed out the IRS, and it doesn't have the resources to go after wealthy tax cheats. And just last week, the Treasury Department said the tax gap for 2019 was nearly $600 billion. That's the difference between taxes Americans are legally required to pay and actual taxes paid. Without higher taxes, the government will need to continue borrowing money to fund its spending. Most of this is newly created money added to the system that just devalues the money that's already out there. This makes the dollar less attractive to investors and business people, but the dollar is considered the world's reserve currency. It's considered a reliable store of value used for international transactions, and other currencies, they tend to be denominated in it. Is a currency rising or falling? Just check it against the dollar. But many experts worry this reserve status is now at risk. I asked Antitrust's chief economist Daniel Lacalle why the reserve currency status is so important for the United States. Lacalle helps manage $6 billion in assets.
Being the world reserve currency is very important for the United States. Why? Because the United States runs a trade and a fiscal deficit. So it is important to remain the world reserve currency because that attracts capital into the United States. Investors all over the world and countries all over the world buy dollars, use treasuries as reserves for their central banks in order to maintain the central bank assets relatively stable. So it's a very important factor. Losing the world reserve currency status would be absolutely atrocious for the United States because it could rapidly enter into Argentina or UK style collapse. Remember that the United Kingdom had the world reserve currency, the British pound, and it lost being the world reserve currency, and then it entered into a stagflationary cycle, and that did not improve until the almost early 80s.
We see the IMF recently say that the share of US dollar reserves by central banks around the world fell to 59% last year. They said that's the lowest in 25 years. Is this some signal that the dollar is in danger, or?
It is an important signal. It shows first that in a pandemic, many central banks sell dollars in order to keep their local currency more stable. Remember that last year we saw that numerous currencies from emerging economies were collapsing relative to the US dollar. So the central bank sells dollars in order to maintain relatively stable, or at least stop the bleeding in the local currency. So what happened last year is almost normal, considering the economic debacle due to COVID-19 and the massive monetary stimulus implemented by almost every country in the world. However, it is important to look at the details, and the details are concerning because in the IMF report, what we can see is that China, Russia, Japan, countries that are recovering quite fast, are not recovering their US dollar reserves as one would imagine. And that, added to the fact that, for example, some commodity producers are starting to accept contracts in different currencies for their commodity transactions, is something that the US government and the US Central Bank, the Federal Reserve, should be extremely concerned about.
Why do you think this is happening? Why are people less willing to do these deals in US dollars?
It makes total sense. When the Biden administration says that they're going to go big, everybody understands that they may try to weaponize the US dollar and try to massively increase the amount of US dollars in the economy by going into monster deficits that will be financed with higher money printing by the Federal Reserve. So when the Biden administration talks of going big, everybody understands that it means going small on the purchasing power of the US dollar. And what citizens should understand is that when governments talk of going big with huge deficits financed by money printing, it means weakening of the purchasing power of your savings and your real wages.
Daniel Lacalle, Tresses. And Florida says it's ending the $300 weekly federal pandemic unemployment boost. It's the 23rd state to opt out early. Officials are trying to get people back to work amid a labor shortage and a booming economy. Data shows nearly 500,000 job postings in the state. Florida will still participate in other federal unemployment programs which expire in September, but it could opt out of those programs early too as officials monitor job posting and hiring trends. The federal supplement is now set to end on June 27th for Floridians. The Californian Trucking Association is fighting a law that will force truck drivers to be classified as employees. The group says the law, if also applied to owner-operators, may reduce pay for truckers and increase prices for consumers. NTD's Colin Fredrickson talked to people involved with the matter.
California law may soon force truck drivers to be employees instead of independent contractors known as owner-operators, causing them to lose huge amounts of income. Lawyer Gregory Feary works with the California Trucking Association.
But maybe more importantly, by eliminating or substantially reducing the possibility that these truck drivers can run their own businesses, they rob the law. AB 5 robs them of the right to be entrepreneurs, to start a business, to build a business.
The law, Assembly Bill 5, makes all companies classify any person who works for them as an employee rather than an independent contractor, with limited exceptions, intending to protect workers. While this makes sense in other industries, for trucking it may raise costs and lower incomes. The California Trucking Association is currently fighting the law in court.
The California Trucking Association is the party that remains the agreed party. It's almost certainly going to appeal to the United States Supreme Court.
The vice president of JKC Trucking, one of America's largest refrigerated trucking companies, is concerned California will lose even more drivers. There currently already exists a driver shortage.
It's unfair, owner-operators have been around for a very long time. You just can't take away this kind of classification, especially if it's worked for so long.
In the end, higher costs trickle down to the consumer, harming the American people. Kucharski says around 70% of goods have at some point been in a truck.
Truck drivers deliver everything except babies. Truck drivers is a super key to the supply chain, to the global chain, imports, exports. It's extremely key, to keep these trucks going.
It may be up to the Supreme Court to ultimately settle the matter. Colin Fredrickson, NTD News.
Stocks closed slightly lower today, actually. The Dow fell 82 points, about 0.25%. S&P 500 lost 9 points, 1/5%. And Nasdaq, though, pretty flat for the day. Yields on longer-dated treasuries fell for a fourth straight day. The benchmark 10-year yield hitting a fresh two-week low of 1.56%. Who worried about rising yields? The Fed officials, they continue to downplay inflation fears. The Fed's vice chair says if there is a jump in inflation, the central bank can take steps to cool it without derailing the recovery. Some housing data out today too. New home sales dropped in April with tight supply and very high prices. Blockchain, the technology cryptocurrencies are built on. They can be used to automate tasks and replace middlemen and processes. That's why so many people think it could revolutionize the financial system and financial markets. And that includes traditional exchanges like the New York Stock Exchange, or even newer crypto exchanges like Coinbase. There are already decentralized exchanges that are facilitating crypto exchanges without a need for a third party, and they're growing fast. $122 billion in trades last month. Compare that to just $1 billion the year before. It's according to one crypto data firm. The trick is they only trade crypto, no dollars or other fiat money. I asked the head of the R&D at the crypto exchange Shapeshift, what's the big advantage of decentralized exchanges for traders?
The number one thing is that you eliminate the risk that the exchange can take your money. We've seen dozens of incidents costing, millions and millions of dollars for traders over the years. This goes way back in Bitcoin's early history, where traders will trust their money with a centralized exchange, and then it turns out that the people behind the exchange, maybe they're malicious, or maybe more common, maybe they just have been hacked. And since you have all your money with the exchange, you lose your funds. With DEX, this does not happen. All the code is on a smart contract on a decentralized blockchain like Ethereum, and you can trust that the code will execute properly. You're not sending your funds into a centralized third party. Therefore, you don't run the risk of having your funds hacked.
We hear some critics say that these decentralized exchanges can facilitate money laundering, criminal activity, because there's no central authority there to see who exactly is who, what are they swapping, etc., etc. Is there a way that these concerns can be ironed out in the future? Can we regulate them away or do something else that eliminates them?
Yeah, that's a good question, Paul. I think the answer lies not so much in regulation, but in a better understanding of the positive aspects of this technology, namely transparency. Everything that happens on these smart contract platforms is out in the open. This marks a really big departure compared to the opaque and banking system, the classic smoke-filled room. If anybody out there has read Panama Papers, things get very it's easy to hide money when you have all these, shell game banking system things going on with overseas accounts. That is not the case with decentralized exchanges. Everything is out in the open. And then additionally, know your customer and anti-money laundering regulations are in place for all the major exchanges where anybody would want to take their money back off into regular cash, into the fiat world. Those are very well regulated. So I think those concerns are overblown. And in fact, this technology can actually protect investors and also reduce instances of money laundering over the long run.
And so say, for example, we'll take this Colonial Pipeline. I believe they were paid in Bitcoin or some form of cryptocurrency. Could they potentially have gone to one of these decentralized exchanges, swap it for Ether, swap it for Dogecoin, swap it for DAI, swap it back again, etc., kind of cover their tracks? Do you say there's still a path for authorities or whoever else to block them if they try and turn it back into fiat? Is it possible, or does it just get too complicated?
No, it really, even if they're doing many swaps between different tokens back and forth, or even blockchains, there are very sophisticated analytics products out there that can be used to trace what's happening. And then in turn, other exchanges can blacklist those addresses and say, well, that's the hacker's address. This is quite common in the industry as well, where known hackers or bad addresses, for lack of a better term, can be blacklisted, and then they can't unload their earnings into cash.
Kent Barton, Shapeshift. And Goldman Sachs has won initial approval to form a joint venture in China with one of China's biggest banks. NTD's Patrick Hayden has more on the rush to capitalize on China's large pool of savings.
Goldman Sachs has approval from Chinese regulators for a joint venture with one of China's largest banks, ICBC. Goldman Sachs Asset Management will hold a 51% stake, and ICBC will hold the rest. Foreign asset managers are looking to get into the Chinese market as it is starting to open up its tightly controlled finance system. This month, BlackRock said it received permission for a wealth management joint venture with China Construction Bank, along with Singapore's state fund Temasek. BlackRock is the world's biggest asset manager. The Financial Times reports that Goldman's research arm says that by 2030, investable assets by Chinese households will exceed $70 trillion. Patrick Hayden, NTD News.
Still to come this evening. You could soon be able to use your smartphone to detect skin problems with Google's help. Find out how it works. And it seems that private air travel is not only for the ultra-rich anymore. At least in the UK, charter flights are seeing a surge in demand. That and more after this short break. United Airlines has agreed not to make its pilots get vaccinated against the CCP virus, but pilots who have been vaccinated would be eligible for extra pay. It's after United's CEO told workers at a meeting in January that the company may make the vaccine mandatory. He urged other companies to do the same. But the new agreement says since the vaccine is not mandatory overall, pilots can't be forced to take it. Earlier this month, Delta Airlines said it would require all new hires in the United States to be vaccinated. American, they say that it doesn't plan to do it unless it's mandatory to enter certain destinations. And restrictions are easing in the United Kingdom, but it's not only commercial airlines that are profiting from it. Now, private jet companies are seeing record numbers of new customers. NTD's Evelyn Lee has more.
While most commercial travel came to a halt during the pandemic, demand for private jets stayed steady. With rules for business and essential travel in place and easing restrictions now in the UK, private aviation is no longer just for the ultra-rich.
Well, it's always been a growing market in the UK, and business aviation is taking probably has a bigger focus at the moment, obviously with the impact of commercial travel.
And efficiency is adding to the appeal. Passengers at Farnborough can board their flight in only 15 minutes.
The speed of service, the minimum fuss, the minimum touch points that you get with business aviation, that is a real USP over the commercial side at the moment.
According to the president of Unity Jets, there are fewer than 30 touch points in private air travel as opposed to 900 in commercial aviation. Farnborough's airport business development manager says with the pandemic, people are finding new ways to do things.
So they're just looking at other ways of being able to travel in the most efficient and safe way and risk-free way possible.
Charter companies say they've experienced waves of increased interest in hiring private jets since the start of the pandemic. According to the commercial director for Veluxis, it started when borders shut down in early 2020. Many were stranded and thousands of miles away from home. And it's not just that.
But we were still able to fly for government purposes, anything related to sort of humanitarian and anything related to the pandemic.
And now with the UK announcing its green list for foreign travel, people traveling to these places don't need to quarantine anymore upon return. And with more relaxed restrictions, Whittle says inquiry levels for private jets went through the roof. Evelyn Lee, NTD News.
If you found a new skin problem, there's an app for that, or at least is about to be. Engineers at Google have developed a tool that the company says can identify 288 skin, hair, or nail conditions. Here's how it works. You take 3 photos from different angles of the problem area, then answer a few questions, and an AI algorithm will give a likely diagnosis. Google claims the technique is similar to what's used to detect eye diseases and lung cancer in CT scans. The company says it got the idea from the 10 billion searches users run each year on these types of conditions. It hopes to launch a pilot of the new tool later this year. And the online streaming entertainment market is getting a bit more crowded. Warner Media merging with Discovery to create a new company, and now Amazon is reportedly in talks by a film studio to possibly pour more content into its existing Prime Video streaming service. Mary Maloney has more on what all of this means for you, the consumer.
The streaming war is already packed full of competing companies, and now new competitors are joining the battle for viewers.
If you understand your consumer and you have the money to spend, you can produce a lot more content for them to keep them much more engaged and much more happy.
Last week, AT&T announcing a deal that spins off Warner Media and would combine it with Discovery in a new standalone company. Discovery CEO says the move has the potential to create a media powerhouse, one that's not just capable of competing with Netflix and Disney, but could alter the streaming wars as we know it.
Content at Warner that people would pay for before they'd pay for dinner, like Superman and Batman and Game of Thrones. And you put that together with all the local content that we have in the market and the relationships that we have, I think it gives us a big advantage in going global.
And now Amazon is possibly upping its Prime Video arsenal. The tech giant is reportedly in talks to buy film studio MGM. Media experts say MGM's films and TV projects could easily find a home on Amazon's Prime Video.
I think the internet is a much more favorable medium for consumers who are saying, I like X, how do I find X?
And while consumers gain content options, experts say the biggest win is that you can watch whatever you want, whenever you want.
That's a better viewing experience, both in terms of content, because I'm looking for something very specific and they're giving it to me in a linear format, but it's also less interrupted by ads.
I'm Mary Maloney.
That's the latest business updates for today. You can still catch NTD Evening News with Stephanie Cox. That starts at 6:30 p.m. Eastern. For NTD Business, that's all for today. Thank you for watching. We'll see you tomorrow.